In our previous lecture, we have covered central bank in a financial system. Now we look at 8 major functions of the central bank. First of all, central bank controls the money supply. Central bank of any country can increase or decrease money supply with the help of monetary policy. In the meantime, central bank can control interest rate of the country with the help of monetary policy. Secondly, central bank supplies the economy with paper money from its reserve. For example, during the Christmas season or during Eid, people usually withdraw more money. In this case, the central bank meets the cash need by issuing more paper money. Then, central bank provides check clearing services. For example, someone who is living in New York writes a check to a person who is living in Los Angeles. So, what happens to the check? In this case, central bank works as a middleman to clear the check from a bank which is situated in New York to the bank which is situated in Los Angeles. And the process is called the check clearing process. Then, central bank holds depository institutions reserve. By law, banks in any country are legally required to keep reserves against their customers' deposits. In this case, central bank is responsible to keep reserve in the reserve accounts at the central bank. Central bank is also responsible to supervise member banks. Without any warning, central bank can examine the papers and the books of member commercial bank to see the nature of loans the banks have made. In the meantime, central bank monitors compliance with the bank regulations. In this case, central bank checks the accuracy of bank records and so on. Central bank also serves as the government's banker. Government of any country needs a checking account. In this case, government's checking account is maintained by the central bank. So, central bank is the government's banker. Then, central bank is also known as the lender of last resort. For example, if a commercial bank faces liquidity problem, in this case, central bank can help the commercial bank with the cash needs. However, central bank usually forces the commercial banks to collect money from other sources. If the commercial bank fails to collect money from any other sources, in that case, central bank usually helps the bank suffering with the cash management or liquidity problems. Then, central bank serves as a fiscal agent for the Treasury. The US Treasury often issues Treasury bills and bonds to collect money from the public or from the financial system. In this case, the central bank receives the bids for these securities, and central bank usually take part in the process of the auction of these securities. That's and in our next lecture, we'll cover central bank tools for controlling the money supply.